What if the next major opportunity in the precious metals market isn't hiding in a breaking news headline, a central bank announcement, or a sudden market crash? What if it's hiding in plain sight, buried beneath decades of market cycles, misunderstood by most investors, and quietly accumulating momentum while the world focuses elsewhere? Most people think of silver as a smaller version of gold, a precious metal that occasionally attracts attention during periods of uncertainty and then fades back into the background. But that perception misses something important. Silver occupies a unique position in the global economy, unlike almost any other asset on Earth. For more than 5,000 years of recorded history, civilizations have risen and fallen. Kingdoms have disappeared. Empires have collapsed. Currencies have come and gone. Yet a small group of assets has consistently retained value across generations. Gold is one, silver is another, and productive land is often considered the third. These assets have survived wars, inflationary crises, monetary resets, banking failures, political revolutions, and technological transformations. Today, silver once again finds itself at the center of a fascinating convergence of forces: rising government debt, persistent inflation pressures, the global energy transition, artificial intelligence infrastructure, growing geopolitical competition, and increasing concerns about long-term currency stability. Here's what's really happening behind the headlines. Most investors are looking in the wrong place. They focus on short-term price movements while ignoring the deeper structural trends developing beneath the surface. Few people understand the chain reaction that could unfold if long-term supply constraints collide with rapidly expanding industrial demand. And even fewer recognize how market cycles, monetary history, and technological transformation are beginning to intersect around one of humanity's oldest stores of value. In today's analysis, we'll examine 6 critical insights. We'll explore what's really happening in today's silver market. We'll uncover the hidden supply challenges facing the mining industry. We'll examine why demand is evolving in ways many investors underestimate. We'll look at historical periods when silver surprised nearly everyone. We'll discuss why governments, institutions, and sophisticated investors are paying closer attention. And finally, we'll explore what all of this could mean for ordinary people trying to preserve purchasing power in an increasingly uncertain world. Because while headlines change every day, the forces that shape major market cycles often develop quietly over years, and silver may be entering one of those moments right now. To understand why, we first need to understand what's actually happening beneath the surface. Most financial coverage treats silver as a simple commodity. The narrative usually revolves around daily price movements. Silver rises because inflation data surprises markets. Silver falls because interest rates increase. Silver moves because investors become optimistic or pessimistic about economic growth. But here's what most people don't realize. Price is often the final result of deeper forces already in motion. Let me explain this with a simple analogy. Think of the global economy like a machine, a massive interconnected machine powered by energy, technology, transportation, manufacturing, finance, and natural resources. Every component depends on the others. When one critical input becomes constrained, pressure begins building throughout the system. Silver sits inside many of those critical systems. It is used in solar panels, electronics, medical devices, automotive technology, power infrastructure, military equipment, and increasingly the digital infrastructure supporting artificial intelligence. Silver possesses the highest electrical conductivity of any metal. That property makes it extremely valuable in applications where efficiency and reliability matter. Yet despite its importance, silver rarely receives the attention devoted to oil, gold, stock markets, or central bank policy. Mainstream headlines focus on what silver did yesterday. The larger story is what silver may be telling us about tomorrow. Recent years have highlighted growing concerns about resource security, industrial resilience, and strategic supply chains. Governments increasingly recognize that access to critical materials is becoming a matter of economic competitiveness and national security. Silver is quietly becoming part of that conversation. And that may be why so many experienced investors continue paying attention even during periods when silver appears relatively calm. If you're interested in understanding the forces shaping precious metals and the global economy, consider subscribing. I post videos like this regularly. Now let's move deeper into one of the most overlooked aspects of the silver story: supply. Because while demand often attracts headlines, supply is where some of the most important long-term challenges may be developing. Imagine trying to fill a swimming pool while someone repeatedly turns off the hose. That's a useful way to think about today's silver mining industry. Producing silver is becoming increasingly difficult in many parts of the world. Many of the highest quality deposits have already been discovered and developed. Ore grades in numerous mining districts have declined over time. In practical terms, miners often need to process significantly more rock than they did decades ago simply to produce the same amount of silver. That increases costs, it increases energy consumption, and it increases operational complexity. Energy is another critical factor. Mining depends heavily on diesel fuel, electricity, transportation networks, and industrial equipment. When energy prices rise, production costs often rise alongside them. Geopolitical factors add another layer of uncertainty. Countries such as Mexico and Peru remain among the world's largest silver producers. China continues to play an important role in refining and industrial supply chains. Russia, Chile, and Australia also contribute significant resources to global markets. Yet each region faces its own challenges: political shifts, environmental regulations, labor disputes, infrastructure constraints, permitting delays, community negotiations. Investors often underestimate how long it takes to develop a new mine. A new silver project can require 10 years or more between discovery and production. Exploration, feasibility studies, financing, environmental approvals, construction, infrastructure development. Every stage requires time and capital. The result is a supply system that often struggles to respond quickly when demand accelerates. And when supply growth lags behind demand growth for extended periods, market imbalances can begin to emerge. Those imbalances don't always appear immediately in price, but they can create the conditions for significant changes later in the cycle. And that brings us to the other side of the equation: demand. Because the forces driving silver consumption today are very different from those that dominated previous generations. Because the forces driving silver demand today are unlike anything we've seen in previous generations. For decades, silver was primarily discussed as an investment metal. Investors compared it to gold and debated whether it was undervalued or overvalued. But that conversation has evolved. Silver is no longer just a precious metal. It is becoming a strategic industrial resource. Think about the world we are trying to build over the next 20 years. Countries are investing trillions of dollars into electrification. Solar farms are expanding across multiple continents. Electric vehicle adoption continues growing. Power grids require modernization. Artificial intelligence infrastructure demands enormous computing capacity, and defense industries are investing heavily in advanced technologies. Silver sits inside almost every one of these systems. Solar panels are among the largest industrial consumers of silver. Electric vehicles contain substantially more electronic components than traditional vehicles. Data centers supporting artificial intelligence require massive electrical infrastructure. Advanced semiconductors, medical technologies, and telecommunications equipment all rely on silver's exceptional conductivity. Here's an important point: many commodities can be substituted. Silver often cannot be replaced easily without sacrificing efficiency, durability, or performance. That makes it strategically important. And unlike gold, much of the silver used industrially is dispersed into products that are difficult or uneconomical to recycle immediately. This creates a fascinating dynamic. Industrial consumption continues expanding while new supply remains challenging to increase. It's one reason many analysts are paying closer attention to long-term market balances rather than short-term price fluctuations. Because if demand continues accelerating while supply struggles to keep pace, markets may eventually need to adjust. Not overnight, not through dramatic headlines, but through the slow and persistent force of economics: supply and demand, the two forces that ultimately govern every market. If this analysis is helping you connect the dots, subscribe and join our growing community here at Precious Metals Alert. Because understanding today's market requires looking backward before looking forward. History rarely repeats perfectly, but it often rhymes. And silver's history offers valuable lessons. Let's travel back to the 1970s. Inflation surged, energy prices rose, confidence in currencies weakened. Investors increasingly turned toward hard assets. Silver experienced periods of significant volatility as markets reassessed monetary risk. Fast forward to 2008, the global financial crisis exposed vulnerabilities inside the banking system. Confidence in traditional financial institutions was shaken. Investors once again began searching for tangible assets. Then came the COVID era. Supply chains fractured almost overnight. Factories shut down. Shipping routes were disrupted. Policymakers injected unprecedented amounts of liquidity into financial systems. The world learned an uncomfortable lesson. Efficiency is not the same as resilience. For decades, globalization prioritized efficiency, just-in-time inventories, centralized manufacturing, lean supply chains. But resilience requires redundancy. It requires diversification, and it often requires strategic reserves of critical resources. Silver sits directly within that conversation. The silver squeeze events of recent years also demonstrated something interesting. Markets can move rapidly when public attention suddenly shifts toward supply constraints. Again, this doesn't mean silver is guaranteed to surge. Markets are complex. Numerous variables influence prices. But history consistently shows that periods of uncertainty often lead investors, governments, and industries to reevaluate strategic assets. Silver repeatedly finds itself in that conversation because of its unique identity. Part monetary asset, part industrial resource. Entirely essential. Today, the world may be entering another major transition period. One defined by debt, deglobalization, energy transformation, and technological competition. And that's one reason sophisticated investors are paying attention. Let's talk about smart money. When people hear that phrase, they often imagine secretive investors operating behind closed doors. The reality is much simpler. Smart money often means institutions focused on long-term trends rather than short-term headlines. Central banks themselves primarily accumulate gold rather than silver, but their actions reveal an important message. Many governments are increasingly concerned about monetary resilience. Record government debt levels continue expanding around the world. Budget deficits remain elevated. Interest expenses are growing, and questions surrounding long-term currency stability are becoming more common. Organizations such as the IMF, World Bank, and U.S. Treasury regularly publish reports highlighting debt sustainability concerns. Meanwhile, BRICS nations continue discussing ways to diversify trade relationships and reduce dependence on any single currency system. Family offices, institutional investors, and sophisticated asset managers are also reevaluating portfolio diversification. Many are not trying to predict the next crisis. They're trying to prepare for multiple possibilities: inflation, currency debasement, geopolitical fragmentation, supply disruptions, persistent deficits. In uncertain environments, tangible assets often attract renewed attention. Silver fits naturally into that conversation because it offers exposure to both monetary and industrial trends simultaneously. Again, this is not a prediction, it's a recognition of changing conditions. If you're finding value in these deeper macro insights, consider subscribing because we cover the stories mainstream media often overlooks. Now let's bring this back to ordinary people, because that's ultimately what matters. Why should someone saving for retirement care about silver? Why should a family concerned about rising living costs pay attention to mining economics? Because these trends influence purchasing power. Inflation affects every household. Government debt affects future policy decisions. Supply chains influence prices. Energy costs ripple throughout the economy. No one can predict the future with certainty. But understanding the forces at work allows people to prepare rather than react. Preparation does not mean panic. It means education. It means long-term thinking. It means diversification. It means risk management. History shows that concentration creates vulnerability. Diversification creates resilience. That principle applies whether someone is investing in stocks, bonds, precious metals, businesses, or real estate. Silver should not be viewed as a magic solution. No asset deserves blind faith. Instead, silver should be understood within a broader framework. One component inside a diversified strategy, one tool among many, one asset with a unique historical and industrial role. Patience also matters. Markets rarely move in straight lines. Volatility is normal. Temporary setbacks are inevitable. Long-term opportunities often require enduring periods of uncertainty. That's true for nearly every major investment cycle throughout history. And perhaps that's the hidden opportunity. Not chasing headlines, not reacting emotionally, but quietly understanding the larger forces shaping the future. Because while everyone else focuses on daily noise, long-term trends continue developing beneath the surface. As we conclude, let's return to where we started. For more than 5,000 years, civilizations have changed, currencies have disappeared, and economies have transformed. Yet certain assets have consistently retained relevance. Silver remains one of them. Today, silver sits at the intersection of multiple historic trends: industrial transformation, artificial intelligence, energy transitions, government debt, geopolitical competition, supply chain resilience, monetary uncertainty. None of these forces operate independently. They're interconnected, and silver may be one of the few assets positioned directly at their intersection. Markets move in cycles. Headlines come and go, but the laws of supply and demand never disappear. Pay attention to the trends most people ignore, because sometimes the biggest opportunities emerge long before the crowd notices. The goal isn't to predict every market movement. The goal is to understand the forces shaping the world around us, to stay informed, to remain patient, and to build resilience in an increasingly uncertain environment, because the future rarely arrives all at once. It arrives gradually, quietly, one trend at a time. And right now, silver may be quietly telling one of the most important stories in the global economy. If you found this analysis valuable, please like the video, subscribe to Precious Metals Alert, and share it with someone who wants to understand the changing world around us. Until next time, stay informed, stay prepared, and keep your eyes on the metals.